Dennis Ma here for JLL MarketPulse, and I'm here to give you an update on the most recent trend in the Hong Kong property market. Commercial leasing markets eased in the second quarter as key demand drivers moderated. In the Grade A office market, net absorption slowed to just 15,000 square feet in the second quarter, after amounting to 300,000 square feet in the first quarter. The slower growth saw landlords adopt a more accommodative attitude during leasing negotiations, despite vacancy rates tightening in Central and remaining low across the other submarkets. Although Grade A office rents picked up momentum in the second quarter, growing by 0.8% compared to 0.5% in the first quarter, weak demand and increasing competition from refurbished industrial buildings saw Grade A office rents in Kowloon East retreat by 1.4% in the quarter. The city's retailing sector also started showing signs of strain in the second quarter. A slowing inbound tourism market, along with changing spending habits of mainland tourists, contributed to retail sales contracting by 7% year-on-year in the second quarter. While demand for prime retailing space remained intact, market sentiment was evidently lower, especially from luxury retailers who are generally among the most affordable occupiers in the market. The slowdown in key demand drivers saw rental growth in the sector more or less ground to a halt, with high street shop rents edging up by just 0.2% in the second quarter. The slowdown in the leasing market had little effect on capital values and market yields. Led by the purchases of owner-occupiers and long-term investors, capital values in the Grade A office market grew by 0.4% in the second quarter, while capital values of high street shops grew by 0.8%. In one of the largest transactions ever recorded in the local office market, Citigroup acquired the whole of East Tower of One Bay East in Kowloon East for a little over $5.4 billion. The transaction price, in terms of unit rate, was about 20% more than the amount paid by Manulife, who purchased the West Tower in March 2013. Looking ahead, we remain optimistic that Hong Kong's commercial property markets will continue to record growth. However, with economists recently downgrading the economy's outlook for 2014, expansion in the market will likely be moderate. Against this backdrop, we expect rents and capital values to grow in the range of 0 to 5% in the city's commercial property markets in 2014. Thanks for watching, and I look forward to updating you again next quarter.